When I think about Bitcoin, I like to try to understand like what is it actually? Like what it is actually made out of? What can we actually expect out of it due to its design and what can and can't it do?
The reason it's speculative is because we don't know how people are going to continue using it into the future. But I would be much more comfortable describing it as a future store of value if those people being onboarded for store of value use case recognize it as money, as currency, something they can use.
When we're talking about society and networks and humans, everything is just people. Like you can't forget that it's all people and people are going to behave like the consensus of people transcends whatever protocol, whatever use case you said Bitcoin is supposed to be for. People have their own incentives.
We're seeing so many banking sort of products on Bitcoin, lending, a lot of fiat games being played on Bitcoin, it seems.
We've seen so many hacks, so many rug pulls. You don't think there's at least one notable entity that just didn't share that it happened?
Hey everyone, Michael here with the Bitcoin Way podcast. Thank you for tuning in. Today on the show, I have John Carvalho. John is a very interesting guy. He's a lightning rod for controversy, lots of hot takes. He has a great hot take at the end. He talks about a BIP that he recently proposed. We also talk about the op return debate and everything going on with Bitcoin Core. We talk about Bitcoin banking and his concerns about financial institutions and sort of the trajectory many Bitcoiners are taking with how they are adopting Bitcoin, if you even want to call it Bitcoin. So very fun episode. Think you'll really, really enjoy this one. One comment, I did have an issue with my camera as we were getting set up. Don't know what was going on still, so it's going to look a little funny, weird. We'll see how the edit comes out, but just know that as we go into it. Enjoy this episode. Hey everyone, like I said in the intro, I've got John here. John, welcome to the Bitcoin Way podcast.
Thanks for having me.
Yeah, I'm looking forward to this conversation, man. Love some of your takes. I want to start with a very broad leading question that I think will frame out a lot of the rest of what we're going to discuss. And that is, how do you view Bitcoin? Like, what's your thesis? Why are you here? Why are you spending so much time on it? What are you hoping it brings to the world? And then maybe we'll get into some interesting topics based on that.
Sure. I mean, in the abstract, I think I'm in Bitcoin because for various reasons in my life, I learned pretty early on to be anti-authority. You know what I mean? Like I just, whether it be like a principal or a teacher or a cop or a parent or somebody just trying to tell you what to do. I think some people figure out that they're just not somebody who really enjoys being told what to do. And when Bitcoin came along and I heard that people were buying drugs online using this, digital currency, I was very intrigued to figure out how they were getting away with that and how it worked. And that's what brought me in. And then very quickly after you get brought into Bitcoin, I don't know how it is today, but back then, this is 2012, 2013, you know, Bitcoin is like opening up a whole new part of your brain for a lot of people because you never really cared that much about economics potentially or that much about game theory or networks and systems and money and the idea of money, and there's just so many things that are interesting to like hop on a Twitter spaces and chat about with your friends or try to pontificate about. And one of the biggest things people would talk about was this idea of there being one money and hyper bitcoinization, and eventually Bitcoin would be this like black hole that would suck everything into it, all the value, and everybody would use Bitcoin, and we would just be so right that the whole world would be wrapped around Bitcoin. And that idea intrigues everybody when you get into Bitcoin, including myself. And I think over the years I've kind of iterated on that idea into, which I think maybe you read, this atomic economy concept, which is a more comprehensive way of looking at the ideal of something like hyperbitcoinization, or more importantly, a future that is, built outward from the individual. So the individual has, control to decide who to trust, what to trust them with, and how much. And so our goal at the company that I work with called Synonym is building an entire ecosystem to demonstrate the atomic economy and how people could use technology to work entirely independently of oppressive systems of middlemen, things like this.
I think based on that explanation, one of freedom, sovereignty, and in from the individual outward, I think a lot of what you say then makes a lot of sense. So there's a lot of topics I want to cover here, but one of the way we connected was you tweeted out either that holding Bitcoin's not using it. If everyone just holds it and no one spends it, no one uses it as money as currency, it would die. And I believe me, I'm a huge proponent of that. I completely agree. I countered on X. I said, I don't think it dies. I agree that it needs to be a medium of exchange, but I envision a world where we can go one of two ways with Bitcoin. One way is far inferior, and that is it can serve as a store of value, even if it's not a medium of exchange, because we've seen that demonstrated by gold to a large degree, and over the last call it 50 years in particular. Can you elaborate on your thought? Like, is there a reason why you wouldn't potentially see that path versus obviously Bitcoin as money, as a medium of exchange, people using it on a daily basis? Where am I wrong or maybe misunderstanding your point on that?
Well, it's nuanced, right? Like a lot of times in Bitcoin, people want to go to the extremes and argue very emotionally and very knee jerk, but it just isn't that simple. I think that I really like understanding, like, the dynamics that happen underneath something, like, the actual, like, how physics affects, and limits a system and things like this, and so when I think about Bitcoin, I like to try to understand, like, what is it actually? Like, what it is actually made out of? What can we actually expect out of it due to its design, and what can and can't it do? And how much should we worry about these things, or how much should we project our own desires or use cases onto it? And understand those trade-offs. And so with Bitcoin, I think that on one hand, it was literally designed to undermine banks and be a user-based money or a market-issued money. And so nobody can deny that, right? Like we know why it was designed. But just because that's why it was designed doesn't mean that the system that was designed to accomplish that goal strictly does that, only does that, um, is even perfect for doing that. And so this is where all the arguments come in is, you like the upper turn debate. You have people debating things from a more emotional or idealistic standpoint and more from a technical standpoint. And then there's some gray areas in between. But in the end, like Bitcoin can't scale. So you can't say that you can't be informed and actually say you believe in hyper Bitcoinization in a way that maintains the integrity of Bitcoin's qualities, where everybody can hold their own keys, transact, in a self-sovereign way. Bitcoin doesn't really scale in that way. So we're kind of arguing more about this sweet spot, right? Of like what use cases are appropriate at what stages in Bitcoin scaling, can we actually use it for various use cases? And what are we going to do when those use cases become obsolete or censored or whatever it may be? And so it's like you have to discuss all this nuance with every little topic, and nobody wants to get into all the details, really, try to understand how things work underneath. They want to talk their book, they want to talk their tribe. And so conversations become pretty difficult.
Yeah, yeah, and I completely agree with that. The Bitcoin way, I mean, our mission is to get everyone into self sovereignty, and I think you raised the point that obviously, as it exists today, not everyone can have self sovereignty, 100% self custody of their Bitcoin. My anticipation is in the coming years, we're going to see a lot of people who are going to be, at least at this stage, necessarily onboarded through L2s, some amount of trust, and I think that's unfortunate. But I also think that if you look at like the average person's willingness to trust institutions, it doesn't surprise me that that's something that they'll be happy to accept. And many people will just be grateful for perhaps a more deflationary world. Do you see any scenario in which we could use L2s and build on top of base layer Bitcoin to achieve at least greater levels of self sovereignty, trustlessness? Because I want to talk to you about Bitcoin and banks and some recent tweets you've had, but or is that just a pipe dream? And really, we just have to accept that the early adopters, the people who prioritize freedom and sovereignty, are going to have the advantage of base layer Bitcoin, owning their own UTXOs, and probably a large percentage of the world isn't going to have that. Or is there some way that we get there closer to there for everyone?
Well, ultimately, like if you're transacting in Bitcoin, you are, any scale that you have follows the scale of the base layer. So whatever amount of scale we can unlock with a secondary layer, it's ultimately limited by what is possible on the base layer. For example, like the security assumptions that make Lightning, something enforceable. In other words, even though you have to trust your counterparty, you have your own unilateral ability to enforce things, and that's how Lightning works. But it doesn't quite work as reliably that way when blocks are full. And there's a bunch of dynamics that change. Like if the value of the channel is less than the cost of the fee, now your channel is trusted. You know what I mean? And not enforceable in the same way. Or if your counterparty is willing to pay more than you are to change the history of that channel. There's all these dynamics that change because the blocks are full and their fees changed. And so basically, it's another spectrum thing where it's like I think when Lightning was invented and kind of downloaded by the Bitcoin community as a concept, we really like went all the way with it. We said it's going to solve everything. It's going to kill Visa. We're going to put the web on there. We're going to put chat on there. Everything Lightning. And whereas today, I think what we're learning is that even Lightning has expressed in a very custodial way, in a very trusted way, and most people aren't using it, in the way that it was kind of, I guess, intended or optimal. And so you have to start asking yourself at what point how much complexity users, merchants, builders will put up with and when they just start opting for simpler custodial trusted solutions. And so that spectrum of what Lightning affects becomes narrowed to possibly only people that are actually frequently transacting, like with a high frequency. For example, exchange to exchange transactions. It's going to make a lot more sense for them to have a channel together if they're sending, lots and lots of transactions to each other all day on chain because they can save all the on chain fees this way in one big fat channel. And that expressed pretty early in Lightning Network, seeing, B2B channels open. That's what the Network, that's the main highways of the Lightning Network is these large channels between major hubs. And so it's more of a hub and spoke network. And so I think it does provide some scale, but it provides scale to much more niche use case of high frequency transacting. Because if you don't transact with a high frequency, now you have to start asking yourself these trade off questions like, is the complexity and maintenance worth it? Am I going to be okay if I can't defend this channel when the fees are high? All these trade offs. And at some point, a normal user is just going to say, well, I'd rather use Wallet of Satoshi because it's custodial and I don't have to know anything about how it works. And I don't care if they rug pull me because it's only $50. And if that's the reality of it, Bitcoiners need to face that reality. And I guess I'll mention maybe a possible segue, which is like I think that's why part of the atomic economy vision. I hope your audience will take a look at the post that I made explaining it. Includes a solution for a mutual credit network, because I think if we're going to start moving Bitcoin to be trusted in order to get the world to use it, we should have first zoomed out and designed how do people actually, what is the dynamic of trust in a network? And how do people choose, like I said earlier, who to trust and with how much? And how do we make a network just simply out of trust relationships so we can make good decisions about, who to have a channel with, who to trust, with my custodial Bitcoin, whatever it may be. And so one of the projects within that vision and something we're doing research and development on is this concept called atomicity, which is just basically a peer-to-peer based ledger system where everybody just keeps track of everything themselves and they have a proofing and routing system for paying each other's. Sorry for
Interesting.
the rant, but it's a
You
lot.
know, no, no, no. I was going to ask. I was like, okay, so what's the solution? So this might actually be a good segue then into banking because it's one thing to have, a hot spending wallet, a lightning wallet, and you keep, a few $100s, couple $1,000s, whatever is a relatively small amount of your net worth that you're keeping in Bitcoin there. What do like how do you think about in the future people evaluating how they store that value for longer? I'm going to set aside some Bitcoin to save. I have some that I keep on, like, highly accessible for spending. If they're priced out of managing their own UTXOs, what's the like where do you retain that value? Where's it going to be stored? Are there L2s that you're excited about? Is that part of what you're building?
Well,
Like, how do you be your own bank, I guess, is
I think that's pretty much what I was just describing in one way. I don't know. It depends on how you define, success, and how you define your goals. But sorry, you were to say something?
Oh, no, no, no. Yeah, I was gonna say, I think that's a big question, is how do you define success? Because I think you and I probably would both define success as, optimal self-sovereignty, to some, like, self sovereignty is sort of the ultimate goal. But I think that there's this big but of, do we have the technical sophistication in ways of making that possible for people without trusting counterparties? And I think that the segue I was making was into, we're seeing so many, like, banking sort of products on Bitcoin, lending, a lot of fiat games being played on Bitcoin, it seems. And I just wonder if, first of all, I think people are opportunistic, and so they recognize in the short term I can make a lot of money providing services that people that feel familiar with on Bitcoin, because they're excited about Bitcoin, but they still sort of have a foot in the legacy system, and so they'll buy my product or whatever. Yeah, my thoughts are kind of all over the place on this particular subject, because I'm trying to kind of figure out, what does
Well,
this.
the use cases are all over the place. You can't. It's hard to pin things down because people have different like expectations of Bitcoin. Like
Mhm.
some people want it to be money and they want to be able to buy drugs with it and not get interrupted. Some people want to just be exposed to the possibility that this is the next big thing and they want a piece of the action. And that's really most people, right? And so, if the use case is just you need something to speculate on, well, Bitcoin can meet that and so can anything else, honestly. Like you mentioned earlier, like is it okay or is there anything wrong with if we end up with Bitcoin mostly just being this store of value concept? The problem with that is there's no such thing as a store of value. There's value is subjective. The value is literally in your head and it's in the head of everybody that you're doing business with. And so it's much more interesting to me to think about like these dynamics and think, okay, like when we're talking about society and networks and humans, everything is just people. Like you can't forget that it's all people and people are going to behave like the consensus of people transcends whatever protocol, whatever use case you said Bitcoin is supposed to be for. People have their own incentives. So we have to be honest about what Bitcoin is and what we can and can't do with it. So I think that it's okay to just kind of feel it out as we go, but I think we have to be more open-minded about things like, I don't know, like if the blocks stay full for a long time and it's not because of spam, it's because it's just, I don't know, it's bankers. It's all bankers doing banker transactions and it's sailors sending money to Brian Armstrong and all these major things and they're filling up the blocks all the time. Are we going to start worrying about, banker transactions or are we going to start wondering if we should raise the block size, or are we just going to tell people to use more and more complex systems on layers that involve trust to the point where we're eventually just using banking with extra steps? Um, I'm ranting a little bit too, but hopefully it's matching your flow here.
Yeah, yeah, yeah. So I think you're right. Ultimately, the incentives of people will transcend any sort of, anything we can throw out there technologically. Is But I think there are ways that the constraints of Bitcoin can affect incentives of people as well. And for some reason, at the moment, it seems like the incentives are to, as I sort of put it, play fiat games. And so we're seeing a lot of, I mean, very familiar traditional fiat products enter the market. And it's kind of built on Bitcoin, and I have a lot of concerns with that. it's my sense is you do too. Bitcoin's intended to replace bankers, not to augment them in some way, or to be embedded in some system that it feels to me like 15 years ago everyone was keen on burning down effectively and resetting. What are could you maybe describe some of your specific concerns about I think I can't recall how long you've been in Bitcoin. I've only been in 3 years, so like I'm still playing catch up on a lot of the historical evolution of Bitcoin. What are your concerns though with what you're seeing today, with all of these new products and people? I think I would bet you most people coming into to Bitcoin are probably buying a MicroStrategy product or ETFs at the moment.
Yeah. I've been here 12 years. So the thing about it is that none of this is actually new. And everybody that comes here, everybody that enters Bitcoin and they enter the whole sort of, Bitcoin culture, and they're kind of indoctrinated into all of these ideas, and they think everything is new. Like you feel like because your brain is exploding with new information that it's actually new to a lot of people. But the thing is that like this happens every cycle, even back to when Bitcoin was $10 and going to, $250. Like it's always been happening, and it happens in a different kind of mutation every few years, but you always get people basically trying to find ways to collect as much Bitcoin as possible from Bitcoin interested people and offer them some sort of promise in exchange, whether it be a yield, an investment, a mining operation. There's so many things that people do, and in every cycle, when they anticipate this hype and this interest, they basically try to intercept Bitcoin interest, and they get in the way. And so instead of people learning about all the self sovereignty stuff, self custody, blah blah blah, a lot of people get caught up in the traditional stuff. Like, oh, this is like investing in Apple 20 years ago. I should have some, or whatever. However they want to look at it. It's like gold, but digital. It's the future, and they never catch on to what's actually happening here. They just think it's another stock, and unfortunately, that's Bitcoin is like one of the worst kind of stocks because if it gets stolen, like they can't just give it back to you. You know what I mean? Like in a situation where Coinbase loses 1 million Bitcoin or something, you're not going to get a refund. If you're lucky, you'll get some settlement. Like look at Mt. Gox, you get some settlement 10 years later for some fiat value or maybe some portion of the Bitcoin you had left, and that's just not worth it to me. I think that Bitcoin loses all of its qualities in custody, literally all of them, like the 21 million limit, the censorship resistance, the permissionlessness, all of it's gone in custody. And all you get is like the Ponzi aspect of it. And that's the problem with everybody. If Bitcoin is only a store of value, well, then Bitcoin is competing with literally everything in the world that could operate as a store of value. Real estate, gold, you know, uh, VC investment, whatever it may be, and that's not good enough. You know what I mean? Like this all it becomes is this totem that people hype up once in a while, and then the smarter people or the people that are in better positions reap, the cream off the top every 4 years or so, and then people are left holding bags, hoping that the next cycle will be the one that they get rich on. And this happens to Bitcoiners too, like there are Bitcoiners here that have been here for probably since 2017 or so that, bought into the hype, and they bought in when Bitcoin was, a decent price, but they could never really quite get enough. And everybody's telling them they're going to get rich someday, but they've maybe got enough to like pay off, some of their car loan, and that's about it. And if the cycles don't keep being 10x, 20x, 100x, people will start getting disappointed in Bitcoin as a store of value and as a hype thing. And we'll realize that we need it to be a money people spend. Um, there's a lot of other reasons for it to be used instead of be stored or hoarded, but I don't know how deep you want to go.
Well, so do you when you tweet and your concerns about like the way that we're sort of migrating toward like a traditional fiat sort of framework, but around Bitcoin with banks and with all of these products we're seeing, is your point in doing so that you feel that trajectory is a threat to Bitcoin in some way, or simply a warning that people who play those games might get wrecked? Because if Coinbase
It's
loses a
both
million
for
Bitcoin,
sure.
Okay.
Yeah,
Okay.
it's a big threat, you know what I mean, to Bitcoin and to the individual. Like, I've seen people repeatedly every several years, get rug pulled, losing millions, tens of millions, billions of dollars, whether it be because of leverage or hacks or bad banking practices. You have a real serious risk of, your master value getting lost somehow, or, this is just not the same thing as holding Bitcoin. And all of that behavior poses a really serious risk to Bitcoin itself as a network protocol, et cetera, because essentially, if you dig into any aspect of Bitcoin, anytime there's this aspect of centralization that expresses in it, whether it be developer governance for Bitcoin Core, mining, the concentration of how many of where the Bitcoin is owned, how many people are using it for a weird use case like with JPEGs. Anytime you have like a concentration of something in Bitcoin, it becomes has its own gravity, right? And so if we give all the gravity to the banks, to the bankers, to the government, you know what I mean, strategic Bitcoin reserves, then they're gonna have power. I don't have to like show you that, they're gonna influence the protocol or they're gonna influence the devs or whatever, because it's just a natural order of things. It's just when you think in the abstract, they're gonna have gravity of some kind. They can use that influence either to limit the availability of Bitcoin and somehow manipulate the price to only be, to be more supply when they want there to be more supply. They can use it to, strong arm miners. The government, as long as people do support fiat, the government has an ability to pour resources where they choose. And that's something that's very dangerous to Bitcoin. So we don't really want like Bitcoin to be something where we embrace government, embrace bankers, etc. A lot of people think when I talk this way, what I'm trying to say is that we should somehow stop them, or that I should have known this was going to happen. And that's not what I'm talking about. What I'm talking about is just as a culture, we boost this stuff. We get excited about it. We support it. That signals to new people, to other people, that this is the correct behavior. And so when you have a legion of master MSTR degenerates, all like, trying to be like GME kind of degenerates and this kind of thing, or people talking about number go up technology, you never sell your Bitcoin. When you develop a whole culture around everything, you know what I mean? It becomes powerful, it becomes distorting, and it becomes influential. And so all I'm trying to do is be on the other side of the Overton window and say, "Hey guys, like I know that you guys really enjoy being over here, on the Overton window, but I wanted you to recognize that it's actually like the window goes all the way over here and there's a whole other side of things that you should be keeping in mind because there's a big gap that you have to be aware of." And I just want to be a force to remind people that this is not healthy behavior. This is the behavior we were trying to design around. And this is not necessarily progress for Bitcoin or stuff that needs our support at all. It's just legacy finance being legacy finance about the latest trends, and the government being the government about the latest places to reap resources. So don't get excited. Don't be a bootlicker. Just figure out like why you're here and own it, I guess.
Yeah, I think that's really well said. So this wasn't the direction I was planning for this particular conversation, but I'm curious then. I'll give you my thoughts after I hear yours on like strategic reserves. People are talking about like the U.S. strategic reserve, states looking to adopt it. Europe seems to be rejecting it. I'm guessing that's not something that necessarily excites you, or at least I would imagine that the sort of the conversation within Bitcoin around that is underwhelming at the least.
Well, why would it excite me? Like, just, it's being candid.
Yeah,
Why do you think the strategic Bitcoin reserve excites anybody?
number go up.
Right. They think that the government is gonna buy their bags or pump their bags, right? That's the main interest, is just creating a Ponzi situation. Basically, a lot of people just see Bitcoin as when somebody buys a Bitcoin, it's off the market, and the more people that buy Bitcoin, the less Bitcoin there is to buy, and the more expensive it becomes. But they just don't even remember that you can't buy Bitcoin without somebody else selling it. And so the only way the Bitcoin price goes up is when people sell Bitcoin. You have to sell the Bitcoin and you have to sell it for more than the market price for the price to go up. So when Michael Saylor buys $50 billion in Bitcoin and he pays $5,000 less than the current price, everybody's like, so they think it's bullish. It's like, oh my God. But I could just, maybe you saw this tweet too, but I could just say the reverse and say, John Dole sold $50 billion of Bitcoin today. You know what I mean? And he sold it under the market price. So it's bearish. Like, your bias is just totally exposed if you're not looking at it this way.
I agree. I will say that for a lot of people, I've heard some people who I perceive to be thoughtful, who believe that a strategic Bitcoin reserve could help us with our debt problem. Like there are positive
the
externalities of
the way to
reserve.
sorry,
Yeah, no, no,
I'm
go
sorry
on.
I'm interrupting. You're just getting me excited a little bit, but
Go.
so the our debt problem is from spending money, and the
Yes.
way to cure our debt problem is to spend less money, right? Now, if you want to also theorize that the government should now have produce things, like it should have products and it should have a yield and it should make money, be a business, then that's not really what the government is for. That's what business is for. That's what corporations are for. Private interests. So why do you want to basically say, I think the government is really good at running businesses and that's how we should get them involved in this? I don't think that that's true. I think that we don't want them involved at all, but I don't know.
Yeah, no, I agree, and I would add, if the spending problem isn't addressed, even if they were able to somehow use Bitcoin to wipe away the debt, let's say, we went to zero debt, or maybe we're running a surplus for a minute. It would only be for a minute, because in 100 years, we would, or 50 years, we would be in the exact same place, because
Well,
none of the
the value has
functionality.
to come from somewhere. This means something both in the strategic Bitcoin reserve sense and the debt sense. In the SBR sense, those Bitcoin come from you. You know what I
Mhm.
mean? Like, those Bitcoin aren't going to be Bitcoin that they like get from North Korea, and now because now that Bitcoin's off the market, your Bitcoin's going to be worth more because they took it from North Korea. Like, it's that Bitcoin, all resources of the government come from you. They come from the taxpayer. So when the taxpayer gets excited about government spending, it seems like, what? Like, this is like the government's actual role and actual purpose is to provide, basically to administer violence. It's to say society has violence as a factor and it has to be managed somehow. And so the people entrust government for, you know, codifying ways to distribute and limit and regulate violence. And then everything else builds on top of that. Government's horrible at running businesses and being efficient and doing things at scale. They're horrible, horrible, horrible at it. So I don't think that we want them involved. Yeah.
Yeah, it's. I'll tell you, you would have hated talking to me much more a year ago, because I was there in Nashville when Trump made that announcement, and again, at the time, I was 2 years into my journey, and I thought, hey, maybe this is me cutting myself some slack. But part of the reason for my initial enthusiasm was, builders are going to be free to build in a way that maybe they haven't been with Operation Choke Point 2.0. A Harris administration, I think, would have been particularly detrimental. Um,
Here's another way to look at it. Like,
yeah.
sorry.
No, 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 no.
Now, imagine that the Bitcoin reserve is 10,000 Bitcoin, and someday, and you say, okay, this is how much Bitcoin we think is going to be enough to pay off the national debt someday. Fine. Okay. What you've quantified. Now imagine instead that Bitcoin never went to the government. It just stayed with the people that had it, right? And then that day came where the government would have paid off that debt with that 10,000 Bitcoin. But instead, the government said, hey, all the people that have had Bitcoin for the last, X years, since we've had this intention of paying off our debt, we'd like you to give us, 10,000 Bitcoin, enough Bitcoin to pay off the national debt. We're just going to seize it from you and pay off the national debt. Say this is 10, 20 years from now, right? Now, how do you think the people would feel about that? Do you think the people would support that? And they would say, yes, we have very all of our Bitcoin wealth that we have saved ourselves, that we have accumulated and hodled and, you know, not spent money for so many years just so we could be rich. We're going to give you a big piece of that just so we can cover all of the things that you decided you would waste money on for the past 10, 20 years. And yeah, we're happy to give you our Bitcoin. It's the same thing, right? Like, do you want to give the government do you want to pay the government's debt with your Bitcoin? You know what I mean? And if that's not true, why do you like an SBR? Because they're just taking that money from you. Might not be directly, it might not take your Bitcoin, but they ultimately have a budget. All of the money they get comes from taxes, from tariffs, from, you know, whatever their methods are, and then they spend it. And so it doesn't really matter where it comes from or in what form it is. It's ultimately this resource that they're spending, and it's coming from you. So you always want to be excited about the government taking less resources, spending less resources, because they obviously have no idea how to operate at scale at this stage, at least.
Absolutely. I think the only thing I've heard that's a bigger scam than government buying Bitcoin for a strategic reserve is the sovereign wealth fund in the hope that they'd accumulate Bitcoin, for especially for a country like the United States, running massive, massive deficits. It's maybe another thing, and it may be a more homogenous society. You're running a surplus. You've got, you know, rich energy resources, whatever the case may be, and you're going to in some way, you know, build up a sovereign wealth fund to for the benefit of constituents or something. But yeah, some of the things that I think we're cheering on are dangerous, and I think my concern is it all goes back. Besides the obvious fallacy, you know, the logical fallacies that you've outlined, is it sort of goes back to what we were talking about at the beginning, and that is people. If government adopts Bitcoin as a store of value, my concern is it perpetuates the narrative that we're the trap we're falling into of Bitcoin as a store of value, exclusively as a store of value. And why would you spend your Bitcoin if you're gonna keep holding your Bitcoin forever and ever and ever and ever because the government's gonna keep on pumping your bags if they're accumulating Bitcoin. And then we never get to a place where people are actually exchanging Bitcoin, at least not in any meaningful way. I mean, maybe a
And we
handful
don't
of
know how many Bitcoin are actually liability at that time. Because if all the Bitcoin's in
yeah, yeah, yeah.
custody, they can sell as much extra Bitcoin as is above the flow of liquidity for withdrawals. So let's say that like most of the Bitcoin ecosystem is custodial, and they have, I don't know, 10 million Bitcoin in custody, just as a random number. And they realize that at the highest, most scary moment, most people never withdraw more than 2 million Bitcoin. You know what I mean? Like there's just
Mhm.
never demand for actual Bitcoin liquidity for more than 2 million Bitcoin. Well, that's 8 million Bitcoin that they can sell and they can leverage and they can repurpose and they can basically create a bubble with inside of it somehow that will pop eventually. And so that's the problem is that that's why we invented Bitcoin was so that we didn't let bankers keep doing that to us over and over. So if you give them all the Bitcoin, they're just going to keep doing it over and over.
Do you think well, John, that's something we've never seen before. Do you think there's a lot of paper Bitcoin on the market today, or are you anticipating that to be a big problem in the future, if we continue down this path?
I think the incentive is so clear that I would guarantee you that there is at least some measurable quantity of paper Bitcoin right now that is a liability that cannot be redeemed beyond 21 million, right? Or beyond the actual amount of Bitcoin that exists. I don't have any proof. It's just something that I have a lot of confidence in because of how I think the world works. So I'm just speculating. But come on, like we've seen so many hacks, so many rug pulls. You don't think there's at least one notable entity that just didn't share that it happened? You know what I mean? Like,
I think at this point we're probably to a place where showing some level of proof of reserves. If you don't show some level of proof of reserves, I just assume you're
I think this is just going down the wrong path. Like proof of reserves are interesting when, like, I think Kraken announced today or yesterday that they're doing a very sophisticated form. I haven't looked into it, whatever, but my guess is if they did it right, the interesting part about it is that they're going to keep doing it in a sequence. So basically, once they've established the current, accounting, it has to match the next time they do the current accounting. The problem with this is that an audit only ever is true for the moment that it's audited, and then immediately after that moment, it becomes untrue. And so you don't know what kind of liabilities, or like you saw, for example, in the past, where I think it was Binance or some one of those one of the Asian exchanges where you would see that they would move assets back into the exchange when they were doing an audit and then move them back out when the audit was over. And like you could just make excuses for that. You can say, "Oh, it's because we keep it here and it's easier to count it when we do the audit to put it there, and then we put it back into circulation because we need it for liquidity." They could just make stories up. So the truth is, all that matters in a trusted situation is not the technology. It's like such a small factor. It just matters whether you can trust the counterparty with how much, with what and how much. It's just those three dimensions: who, what, and how much. And you have to keep defining that. And that's why you'll see that within themes for our products as well, like the stuff we do at PubKey, the stuff we'll do in the future with Atomicity. It's just trust. It has to be kind of measured in this way. You put a context into it.
Yeah, it feels to me like we're moving into a world of trust, don't verify, or trust, try to verify if you can, maybe if they're willing to help you verify. And yeah, I think it's a dangerous path. I
Like,
think
here's
my
an example, like, you could say, "Oh, one exchange, when something bad happened to them, they went bankrupt. So the people involved now, you should probably never trust them again in your Bitcoin." But another interesting example is like Bitfinex. They got hacked, and they did various programs. They issued equity in Bitfinex. They had a debt with, if they get the Bitcoin back from the government, and people will get that Bitcoin into these like Leo shares and stuff. I don't remember all the details of it, but the truth that in the end they made their users whole as best as they could and beyond that. And so now you could say to yourself, okay, on Bitfinex, if I know that if something goes wrong, they're going to make a special effort to fix it. That's two very different situations, right? Like
Mhm.
one of them, and most people don't even measure that. They just say, "Oh, my friend uses this, so I'm going to use it." And it's
Yeah.
just this like circular logic of all the friends thinking the other friends use it 'cause it's safe.
Yeah, yeah, yeah. I mean, and that's true. I like to think that any advice I would give to friends or family looking to get into Bitcoin would be sound, but most of them are going to trust what I say and not do any research and not listen to podcasts and not read the books and not really
I mean,
dig
I've
in.
been wrong. My first few years of Bitcoin, I said ridiculous things. Like, and so if I had tried to like orange pill people and whatever, I may have set them up in bad situations. So you got to be careful with evangelism. That's another thing too. Like a lot of Bitcoiners think evangelism is like a virtue. Like like you said earlier, even a similar term, which was like we're trying to get everybody into self sovereignty. Well, that's much more respectable than most Bitcoiners just want to get everybody into Bitcoin. In other words, they want people to buy Bitcoin. They want them to soak up liquidity and hodl forever. And that's not like a benevolent desire, right? That's a selfish desire. So helping people understand and learn about Bitcoin is great. It's a good thing. But being an evangelist and having this idea that like we have to go out there and convert everybody to Bitcoin, I think that's a slippery slope, or at least a weird kind of moral path.
That's an interesting point. I think maybe a better way of framing it, I'd be curious your thoughts would be instead of getting everyone into Bitcoin, get everyone into freedom. Help people understand the
Or self-responsibility, because that's
yeah, yeah,
ultimately
yeah,
like, you
yeah.
can't have freedom. I know that, what is it? Jocko says discipline is freedom. And, I think that that's the biggest X factor in everything that we do in Bitcoin, everything we do at Synonym in our company, all the like freedom tech that we try to build is you can lead a horse to water, but you can't make it drink. And so until we can figure out how to accompany, like we need a meme system and a culture that when people enter it, what they enter is a cult of self-responsibility, not a cult of we're all going to get rich in the future, when the aliens arrive. um, it's I know that's not the best example or analogy, but you know what I'm trying to say. It's like a cult thinks the aliens are going to come, everything's going to change. Well, the Bitcoin cult thinks that one day they're just all going to be rich by doing nothing. That's not rational, you know?
Yeah. Yeah, I think the best orange pill someone can deliver is, is giving people the information and the understanding of what is broken and what Bitcoin might fix. Because I think most people are just I mean, they're completely asleep at the wheel on, like, "Why am I losing
Yeah.
purchasing power?" I mean, I think Larry
It's
Lepard.
tricky though, because a lot of people don't have censorship problems, right? Like
Yeah,
most people don't have a censorship problem. Most people don't have enough money to get annoyed by the bank, stopping them from withdrawing $10,000. You know what I mean? Like a lot of people don't feel some of the pains of where Bitcoin kind of helps best. It's kind of so what happens is you say you need to talk to their problems. Well, you start talking about Bitcoin, eventually they hear and it's gone up a lot, a lot, a lot, a lot, a lot for years and years and years. And they think, well, I have a problem. I'm poor or I want more money. That's my problem. And that's what ultimately attracts most people. And maybe that's the meme that makes Bitcoin succeed. And I shouldn't be so, you know, pessimistic or judgmental about it. But I don't know. I wish it was more this kind of idea of people entering a cult of self responsibility because you can't have freedom without being responsible for your own stuff, your own actions.
yeah. Well, so the reason I like Larry Lepard's new book, The Big Print, and it's because he doesn't start with Bitcoin. He walks through basically the injustice of what everyone is experiencing every day that I think most people are just completely unaware of. If you even if you don't have a censorship problem today, I think everyone like can sort of feel the effects of the underlying problem, but they can't put their finger on what exactly it is. And so, the more education we can have toward what's broken, and why do you feel the pain that you feel today? Maybe it's not censorship, but it's I'm 2 years ago I could or 4 5 years ago I could feed my family comfortably, on a salary or a salary and a half, and like
Right. Like there's I complain about people wanting to get rich off of it, but there's also the same factor, which is an honest factor, is people being exposed to inflation.
yeah.
Um, but again, I think a lot of people know about inflation. And I think a lot of people this
Do you
is
think
why
they know
people
why?
invest.
Do you think they know why?
Well,
I don't think they really I think they feel the effects and they
they
know inflation, but I don't think they understand what the hell's going on. Why are the
it's
banks.
different by class. Like, I think in the lower classes, they don't know the same way in the higher classes. Like, in other words, middle and upper class, they know they have to, like, invest in real estate, you know, index stocks, things like this, safer investments where they can get at least 5 to 10% a year to beat inflation.
Yeah.
Now, less economically educated people are more likely to be in uh lower income classes. And so you get, less people being aware of what they could do or what they should do to avoid inflation. But they also have less exposure to inflation because they have less savings, at least monetary inflation. So they really have it bad because they don't have a way to hedge against inflation, but they have to keep paying the higher prices. So their only hope is to continually ask for raises that match the inflation rate, which is something a lot of people don't think about either, and they should be doing.
Yeah, yeah. Unfortunately, I mean, historically, my understanding is wages tend to lag, and that's why you look at like the median cost of a home today versus, 30 years ago. And then you put side by side the median wages, and I mean, just completely out of whack over just, 30 years, much less 50. Um,
Yeah, I think, like, in some places, you can easily say prices have doubled in 5 years. Have salaries doubled in 5 years? No.
Not a chance. Yeah, yeah. I think if we can get people to understand though that there's sort of an opt out of that into Bitcoin, not just because number go up. Yes, yes, for preserving purchasing power, for storing. I mean, I don't completely reject the term store of value. I think it is a way to store your value to retain your economic energy and the value that you bring
You just
society.
have to recognize that that's speculation. That's the tricky part here is that it very well might be great advice and a great strategy to tell people that all of their savings should be in Bitcoin. Any amount of money that they can afford to hold for 5 or more years should probably be in Bitcoin. And that has you can look at history in the past, 15 years and you could show them that that's obviously true, right? But you can't that's to say that's going to be true is predicting the future, and you can't actually predict the future. It's speculation. And so as soon as you start saying store of value is the use case, you have to recognize and remember that all you're doing is speculating. And so, you could say, "Oh, well, you're even speculating we're using our money. You're just speculating for less time. It's all in a spectrum." Sure, it's true, but we need the higher the frequency of the people, circulating the money, the more power it has, the more value it actually has. Like literally, the more transactions that are happening in the blockchain, the more the price of Bitcoin goes up. And so, I think that you have to be careful with the store value thing because if you aren't also using it in some way that it's special, that everything competes with it. I can say, diamonds are a store of value, magic cards are a store of value, Pokemon, like sneakers. It doesn't matter. Like anything that I think is going to be inflation is a store of value. Anything I think will continue to have demand into the future is a store of value. It's not as interesting as Bitcoiners think it is, in my
Yeah, no,
opinion.
yeah, no, I agree with that. The other component is I think if people come for the store of value that it has historically been, speculating that it will continue in some capacity in the future, if we can educate people on the reason it's speculative is because we don't know how people are going to continue using it into the future. But I would be much more comfortable describing it as a future store of value if those people being onboarded for store of value use case recognize it as money, as currency, something they can use. Because if we can begin to cannibalize the fiat system as money, we're exchanging value in Bitcoin versus dollars, euros, yen, what have you. Then I think it's going to help fuel and drive. And I think this kind of goes back to your point that like
Yeah,
it's
if you can more easily use it to cross borders, to evade censorship, to create black markets. When I say black market, I don't mean in the sense of uh, criminal or evil. I mean in the sense that it's outside of the actual regulatory and legal system, just literally. Like Bitcoin, this is a term I think coined by Eric Voskul, who's, if you and your audience are interested in diving deeper into some of the ideas that I talk about related to money, I get a lot of them from him. He has a book called Crypto Economics. It's a bit difficult to read, but there's a PDF of it. You could probably get AI to kind of guide you through it. But it's the only attempt I think anybody has made to like fully model Bitcoin as a system and explain how it works economically and where the incentives are. A lot of people don't like some of the ideas in it, but they're pretty hard to refute, and so it makes it interesting.
Yeah, yeah. No, that makes sense. Okay, hey, let's switch. You wrote an article recently I wanted to talk to you about. Pretty short article. How to think about data on Bitcoin. This is a hot topic. So could you maybe frame in the least I'm not highly technical. In the least technical way you can you explain what's going on with op return, what's happening in core, and then maybe that'll set the stage for the questions I have.
Sure. So I'll try to explain the op return debate a bit and a bit of what I was getting at in that article. So there's a way to include some arbitrary data in Bitcoin, and there are various reasons why this is interesting and useful. And Bitcoin has various like features, and a lot of them are like they say op underscore and then a word. And so you'll hear people talk about, oh, we should add op cat to Bitcoin. This is like in the or op CTV. These are proposed forks. And so op return is one that's been around for a long time. There's been controversy around it in the past, but ultimately, it's a setting in nodes that are operating in the mempool, so it's what's called a policy, which means it's not consensus code. Like it can be different on different nodes, and Bitcoin still works. Whereas if like different Bitcoin nodes had different block size than each other, they would fork. But this is just not consensus code. It's just how the nodes behave on the network when they're talking to each other and which data those nodes store within that individual computer when they're operating. And so you have people on one side that have been making this effort to kind of effectively and literally censor transactions that are in the mempool that are intended to be included into blocks eventually by miners because they don't like the type of transaction. And so the type of transaction that they don't like in this case is one that's using Bitcoin as a data store to either store, memes, JPEGs, NFTs, but also there are other use cases people are building for kind of encoding data to be able to anchor and create other abstractions. Like, I think that one of the little mini dramas within this thing is there's this project called Citria that could benefit from, actually, that could create less UTXO pollution, you could say, if they had bigger opportunity. And there's a bunch of little nuances in the debate. A lot of the nuances are just technical. But the interesting nuance, I think, that brings everybody together by making them fight is that in the end, you have a situation where there's an actual unintentional ad hoc governance happening through Bitcoin Core. And when there are changes that are subjective, they have influence because they are a default, sort of most popular implementation. And effectively, you could argue, are the reference implementation. And so other implementations, well, like knots, that some of your listeners may have heard of, and Libitcoin and things like this, which are not very popular and still have a lot of work to do to kind of catch up to core, but have some interesting things about them. They don't have as much influence. And so when core decides to make a policy change, it doesn't take a lot for it to actually become the status quo. And so the people that have been trying to fight these spammers, as they call them, um, they don't want this change. They don't want to increase the opportune size because they've been trying to fight people using this use case. And the problem is that there's this technical nuance where the way that the spammers will use it instead, if we don't do this, creates a sort of pollution in one of the data areas of Bitcoin called the UTXO set. And this is like a database that you have to keep in order to properly validate Bitcoin and run your node, run your full node. Um, so yeah, are you with me so far?
Yeah, yeah, yeah. No, I think so. So really,
Okay.
really, the removal of the limit on op return, it affects it affects what you like, assuming you're running
Like,
the
there's transactions in the mempool, right? And your node's purpose in the mempool is to relay those transactions to other nodes and collect transactions from other nodes. Just passing transactions all around. And that's what's in the pool. And we're trying to make the pool as relevant and as useful as possible. So ultimately, miners know about as many transactions as possible so they can choose the most valuable ones to include in the block. But when these nodes are all sending these transactions to each other, they have to have limits and rules to decide how much they're going to do. Like, you can't store an infinite amount of transactions, so your mempool actually has to have a limit. But that limit's on your computer. It's not in the rules of the protocol, right? Every
Mhm.
different node can change that limit. Your mempool can be 1 megabyte, my mempool can be 1 terabyte. And I can keep transactions older, way back into history that maybe other nodes dropped because they didn't have a high enough fee or whatever it may be. So these rules end up, the fix the filters people think that they can stop incentive based transactions. You know what I mean? They think that if they get enough people in the mempool that are basically not relaying specific transactions, that those transactions will never make it to a miner. And that's not a logically rational, technically sound perspective.
You'd
And
have to
that's
have
why,
effectively 100% of people either running knots or opting for an older
not
version of Core.
actually.
Yeah.
That's not the reason. Actually, the mempool expresses in weird ways. We learned this when I was fighting against. There's an irony in all this, and that this a similar battle happened a few years ago, and I was the only person on the other side, and I was trying to get them to stop changing a mempool policy. And I was saying that it was controversial, that it would break the current use cases, etc. And what they did it anyway, and what they ended up seeing is that it only took a small percentage of nodes for something to effectively become policy when it comes to relaying, or not relaying. And so the actual issue here is those people with those valid transactions, if we do effectively censor them, one, we've added the capability to make it easier to censor Bitcoin. Is that really what we want? Probably not. But more importantly, what it incentivizes is now those people with those transactions trying to find ways to send them directly to miners instead of the mempool. And what that does is effectively create more than one mempool paradigm. And so you have private mempools, exclusive mempools, things like this, where you can pay a mining pool a fee, and they'll process your non-standard but valid transaction, and you'll circumvent the entire mempool. And the problem is if you incentivize that behavior, the mempool becomes less and less useful the more that it happens. We use the mempool to estimate what transaction fee you need to include to get, into a block, things like this. And if there's mempools of all kinds of different fees and we can't see them, then the whole system becomes less useful. The mempool is meant to be an altruistic system where your main goal is to share as many transactions as possible with other nodes. When you start trying to apply subjective, you know, uh, censorship or subjective processing of those transactions, you make it less useful for everybody. That's the real problem, is that there are people on the technical side that see it this way, and they see the arguments from the emotional side, and they say, I can't take these people seriously because their argument is not technically sound. So what I made 2 articles actually. I made the one how to think about data on Bitcoin, and then one about talking about it wasn't an article, but I sent it to the mailing list, and I also sent it as a tweet. That the argument on the emotional side shouldn't be about anything technical. They should just stay out of the technical arguments and whether or not we should make this change or whatever, and just simply be arguing that Bitcoin Core development as a entity shouldn't be making policy decisions at all. That it should just be Bitcoin Core. It tries to be as core as possible with as least policy influence and configuration influence as possible. And then there are downstream distributions of core that have, like knots, for example. Like knots, I wouldn't use knots, and I don't have an impassioned, deep, feeling for either side on this issue, other than this concept that I think the actual problem here is not about whether somebody's technically right or wrong about what to do about this, but that we're letting core and we're putting developers in a position to act as governance and influence policies. And that's we have to avoid that. It's another form. You can't have governance without centralization. You can't have governance without the actual government wanting to leverage that governance to tell those people to do what they want. It's just another slippery slope.
So
And so
do you think that that the core devs have received enough um uh, uh, I guess just enough. Has there been enough controversy over this that they should back off and opt out of this change, or do you think because they're fighting on technical grounds and the other side maybe on more philosophical grounds that it's within their rights to do so? I think maybe that's been my biggest
well,
concern.
there's no rights, right? Like
Yeah,
the
yeah,
right,
yeah.
they
What
have
do
all. If they
you
have
think,
merge
though?
access or they're maintainers, they have the rights. You know what I mean? Like nobody has any rights. The rights are what you can defend and enforce yourself. As far as what I think core should do, or like, I think if they were smart and really progressive and benevolent, what they would do is they would get together and they would come up with a plan to execute what I said, which is okay. We realize that this is the problem of policy governance is never going to go away. And so what we're trying to do is establish a agreeable set of default, configuration settings and policies for Bitcoin Core that removes subjectivity as much as possible, and then leaves any sort of policy decision making and implementation to users and individual distributions of Bitcoin Core. And Bitcoin Core tries to, and they show us a plan of how they could turn Bitcoin Core into something that is actually core and not something that is meant to be comprehensively a node wallet, uh, you know, mempool, server, all of the things that it's trying to be. So yeah, I think that would be what the I would be like, wow, they're actually going to do it. I'm impressed. What they're actually going to do, I don't know. I think this is a tough one. It's not that consequential, so it's probably easier for them to just wait and do nothing and see how the community kind of digests it. But the problem with that approach is apathy always wins. And so what will happen is core will just get the core culture way once the public has gotten bored with the topic. And that's dangerous too, right? Because it didn't fix anything. It just means that core knows that all they have to do is when people get excited, they just have to wait till they get bored and then do what they were going to do anyway. that's how governments work too. So it's like, that's a little scary, and that's maybe what will happen, but it might not happen because of evil. It might just happen because being a core dev and having everybody yell at you is not fun. It makes you question why you do it, because core devs see it as, we're doing work to help you. Everything we do is to help all the users of Bitcoin. They see themselves as like, maybe even see themselves as saints or something. And so when you come to them giving them hell for giving you their expertise and their work, sometimes for free, it's not easy to care. It's not easy to be excited and be, proactive and progressive and benevolent.
Do you have any concerns that perhaps the well's been poisoned? And this isn't my necessarily my take or not. I don't know. I'm not close enough to the action that maybe there are outside influences affecting what core may or may not do. I've seen like conflict of interest sort of discussion. But someone called out I
I,
think Peter
I don't know
Dodge
if there's a conflict of interest
maybe.
in the case.
Say
Yeah,
that
I don't know
again.
if there's a conflict of interest in this case. I heard some evidence. Sorry, you had a little bit of a delay. I don't mean to interrupt you, but you might cut out a little bit. Um, Sorry, what were you saying? Oh yeah,
Oh,
there was some evidence that maybe there was some drama with, like, because like Lop is kind of like, probably having Jameson Lop is one of the guys behind Citria, and he is also, somewhat in the core dev circles probably, and has some connections with some of the kind of insider cliques there. I don't know though, and I don't think that Lop is doing anything evil either, but I do think that there's gotta be some influence here, because in other words, it's just not that consequential, and really the only, like, actual specimen of consequence here is Citria, you know what I mean? And so it's like, I don't know, I just feel like it just doesn't matter that much. So maybe they'll do nothing, maybe they'll do something, maybe they'll do the wrong thing, maybe they'll do the right thing. We won't ever know, because we don't get to see both versions, we just get to see what they chose, so we don't even know what's best.
Yeah, yeah. Okay, well, no, I appreciate that that background because I think a lot of people are just trying to get their heads around this. Uh, you have just a couple more minutes. I know we're past the top of the hour,
Oh, whatever you need.
so I wanted to give you an opportunity to just talk about the projects you're working on, and then I'm going to close with the final question I ask everyone. So you've got PubKey, BitKit, and Block Tank. Could you just kind of give an overview on what those are, what your objectives are, what does winning look like for each of these things?
Sure. Actually, I'll shoot myself in the foot a little bit, because we never got to and by not describing my products and describing more Bitcoin stuff, we never got to the article about how to think about data on Bitcoin. And
Oh, oh yeah.
I just wanted to quickly mention that, or as quickly as I can, because it ties into a lot of the stuff I mentioned earlier, which is like about store of value and abstractness and this kind of thing. So what it ultimately comes down to is, in Bitcoin, there's no value in there. You know what I mean? Like, the only literal value in there is a number, right? It's like how many Bitcoin, how many units of Bitcoin are in that UTXO. So when you look at the blockchain, you can try to make an assumption. You could say like, oh, this transaction happened on this date, and Bitfinex says the price was this price on that date. So that means that that person sent some other person X dollars. But you're entirely speculating. You don't actually know what any Bitcoin transaction represents in the real world value wise, because all of the value in it is encoded in some way. In other words, it's either encoded by the subjective value in your head, and you say, oh, I value that Bitcoin at the price that I see on Bitfinex, and thus I'll accept it as payment. But that Bitcoin transaction could represent anything. It could represent, I wanted to have a signed transaction on the blockchain to have as a proof, so I could show the transaction ID to a VIP club that only lets me in if I have a proof of a transaction to this Bitcoin address. Or that transaction could have represented something encoded that represented the whole stable coin on another layer. It could be a lightning channel in that transaction. It could be a lightning channel factory in that transaction that represents 100 people. It could be a JPEG. It could be an anchored, encoded anchor for Citria and a BitVM abstraction. Like, when you look at these transactions, you don't actually know what they represent to the people that were involved. You don't even know if people were involved. You don't know how many people were involved. You don't know if it's a self send or if it's an actual transaction, because those aren't transactions at all. They're just transactions in the database definition of the word. That's why they're called that. It's not because they're an actual economic transaction. What's in the Bitcoin blockchain is just a database update. It's just saying, oh, this key has permission to this many units, and now this key is telling me to change that permission to another key for this many units. And that's all it knows. It doesn't know what those units are worth, whether there's two parties, whether, it doesn't know anything. So all the value is subjective. So if you understand this assumption about a Bitcoin transaction, that you just have no idea what it's worth when you look at it, then you understand that all value is subjective, and thus any opinion you have about a Bitcoin transaction is extremely biased to your own subjectivity. So if you say that's spam, that's just an opinion that you have. You know what I mean? There's not some kind of objective truth where you get to say that a transaction you don't like is spam. It's a valid transaction. They paid the fee. They got on the blockchain. It's a transaction. You have no idea even if you know what it represents. It doesn't matter. You weren't involved in the transaction. You didn't own that Bitcoin. You didn't have rights to do anything. You didn't have any right to stop that person because you're not a minor. And so that's that. I just wanted to go on that little rant about the subjectivity of Bitcoin, because there is no digital energy in there. There's no dollars in there. It doesn't store anything except a number. And so that's how you think about this debate. It's to say, why do I even care if somebody's using Bitcoin transactions to do something that I don't use Bitcoin for? Because I have no idea how people use Bitcoin. I know how I use it. And in the end, if that's true, that means that literally every transaction that is not to or from you is spam. You know what I mean? So, like, everybody in the whole blockchain is processing spam most of the time, because most of the blockchain is not your transactions. It's somebody else's transactions you don't care about. You have no idea what they were worth, etc.
So I hear you on that. It makes a lot of sense. Could that logic though then be used to justify anything going, like larger block size limit? I mean, like, moving forward, like, well, why not just let anything in? Like, why wouldn't you be a B casher? If and maybe I haven't had time to like absorb this and really think long on it, but it seems to me like if
The problem
anything
with
could
block size is
spam.
it only works within a spectrum. Like, yes, you can raise the block size and get more throughput, get more transactions, etc. But at some point, you hit some limits. Like, all expense in Bitcoin is exclusive, right? So that means the cost to run a node, the fees to acquire a Bitcoin when you buy it, the fees to send a Bitcoin, on chain. uh, the more these go up, the more people that are on the bottom of the ladder get ejected from Bitcoin. Literally, they just can't afford to use it. And so when you we can keep trying to keep that window as big as possible and include as poor people as possible. But if we don't increase the block size, eventually that exclusivity just keeps going up, right? And there'll be a specific set of people that can afford to use Bitcoin, and then a specific set of people that can no longer afford to use Bitcoin. So you could say, okay, then keep increasing the block size every time that happens. Well, the problem is that now at some point you hit a threshold, and we're not at that point, in my opinion, but at some point you hit a threshold where the cost to run a node becomes prohibitive to those people. You know what I mean? And so now they can't actually participate self sovereignly directly in Bitcoin. And so now you're shedding those people because you made the blocks too big. And then somewhere above that, you hit the limits of speed of light, where people across the globe or certain distances from each other or latency from each other for whatever reason can't see the same blockchain fast enough. And so you end up with these forks, you end up with orphans, you end up with all kinds of problems because the state of the whole system can't sync properly. Um, so that's another issue, is that at a certain size, you start seeing those problems express as well, with the size being too big. And so ultimately, we can only scale it so much.
Yeah, no, that makes sense. Yeah, I think there's just a lot to think about.
I do support the idea, by the way. Like, I do think that raising the block size was a good idea. It doesn't bother me that that we raised it maybe a little too early and a little too much because obviously people are finding alternative use cases for the space, right? They're saying, oh, this is more valuable to use it for data storage than as transactions. I hope that's not always true. It could be always true. If it's always true, then people will just say, oh, blockchains are a system for permanence of data, if you want to have a really expensive system. I don't think that's true. I'm skeptical because that doesn't scale either. Um, yeah, I don't know.
Yeah. No, interesting stuff. Why don't you give this a quick rundown on the projects you're working on? Because I do want
Sure,
people to
sure.
understand what you're
No,
doing.
I
Yeah.
appreciate it. So as I mentioned, the name of the company is Synonym. We are a subsidiary of Tether. We have no part of Tether's roadmap per se. We're independent as far as what we work on. It's all of the interests of my own vision for this atomic economy. Within that, so far, we have built BitKit, which is a mobile app that supports Bitcoin and Lightning. There is a Lightning node inside of the app. Um, BitKit is been out of beta for uh, maybe about a year. Um, it's pretty stable now, working pretty well, and in my opinion, one of the best, self-custodial mobile Lightning wallets. Then we have Blocktank, which is not so much a product as a service. Basically, it's the Lightning node that is behind BitKit. And so when you want to connect to the Lightning network and this kind of thing, or route payments through a Lightning network, BitKit by default will let you buy channels from our node, which is a large, well connected node that we manage. So you don't have to manage the complexity of making sure you're well connected in your mobile app. So Blocktank is just a service that provides liquidity on the Lightning Network. Um, then we have PubKey, which is probably the more ambitious and um, complicated aspect of the vision. So PubKey is sort of what brings together the whole atomic economy idea in that it's a new web. There are aspects of it you could compare to Nostr. I don't know how familiar you are, your audience is with Nostr or Blue Sky or other attempts at self sovereign web kind of stuff. But the kind of most unique aspect of what we're doing is instead of just using a public key and signing everything with it like Nostr does, every single message, what we do is we sign a DNS record. For those of you that are familiar with websites, when you buy a website domain, you have to define these kind of details in the domain that tell the internet where to go to find the data when you go to a website, because that data has to actually be on a computer somewhere. And so instead of using ICANN and trusting these domains are trusted, they're censorable, etc., we use your public key as a domain name. And so you sign a DNS record with your public key, and then you take that DNS record and you put it inside of mainline DHT. Mainline DHT is a network that's existed for more than 20 years. It's the network that powers BitTorrent and torrents when you're coordinating with all those nodes to try to download that, latest Frozen 2 movie or such. You're actually coordinating all of this through a DHT, which is probably the largest and most censorship resistant network on the internet. And so this is where your DNS records live. And so when somebody in our system wants to go and look up your website or where your data lives, they just need your public key. And when you say, for example, say you're using a service provider like us, and say we're hosting your data in this web, and we censor you or we start performing badly, all you need to do is update that DNS record in mainline DHT and change the provider because you have the key. So you're the authority on where the data lives. So this is much different than how Nostr kind of does a spray and pray and just hopes there's going to be many relays that have most or all of your data. This is more of a definitive system where it's like you are the authority and you define where your data lives. If for some reason that data can live in either a self-hosted place or a trusted place. If the trusted place misbehaves, you can change the definition of where your data lives so everybody looks for you there instead. I apologize if this is a little
No,
technical.
no, that last, I mean, it's all really cool stuff. PubKey sounds that sounds like highly consequential if you get the y- I guess the buy-in, and if the market votes on something like that, that seems like a really big deal. Is that the project you're personally spending the most time on, or what's sort of your like where do you feel your days?
Well, I'm not an engineer, I'm not a developer, so I don't the people spending the most time on this stuff are not me. The people doing the hard work, the important work are not me. I just do the kind of being crazy and coming up with ideas and trying to combine these primitives, and then I hope I don't make something too stupid and they correct me as we go. So yeah, it is a lot of work. Basically what I started with that idea of the public key domains because what that means is now we have to rebuild every piece of your typical web in, setup that supports this. So we have to build a server that supports this. We have to build an application that supports this. We have to build a keychain that supports this, etc. And so we have various sub products within this. Right now, the state of things is that we have PubKey Core, which is all the protocol code. That is all open source right now. If there are developers in your audience listening, they can go to github.com/pubkey and find the current repositories for all of the system. And then we have PubKey Ring, which is a mobile application that's used to store the keys. So, like, unlike a Nostr, you can have the keys basically separated from the application, which means you could even keep them cold if you wanted to. Because you only really need the keys if you need to update your DNS record. You only update your DNS record if you change the location of your data. So, about as often as you change your website server, you know?
Okay.
um, or as often as you get banned from a service.
Right.
Yeah, and so we have PubKey Ring. That's in beta already in the App Store, but there's no use for it now because we're still building a PubKey app. And so this PubKey app is actually a web-based PWA app where people will be able to use all of this stuff together and interface with this new web. And then finally, one other novel or unique aspect of this PubKey system is within the PubKey application, we have this concept called a semantic social graph. Um, what that means is if you think of like the database of Twitter or the database of Google or any system, there's an index of like all of the URLs, like all of the different web pages. In Twitter, it'll be like x.com slash, some ID of a specific post. But every single post, every single profile, every single destination has some sort of URL, right? Well, so now we have URLs in the web, and in our web we have public keys, right? And we now I'm saying we have a graph. Well, a graph you need to connect things, right? And so what we introduce is this concept called social tagging. So any key can now semantically tag any URL or any other key with anything, any arbitrary data. You can say, I can tag you as Bitcoiner. I can tag you as 13759. I can tag you as, podcaster. I can tag you as American. I can tag you as my best friend, family, whatever it may be. But any these tags create these relationships in a social graph, and we use the social graph as a way instead of having an algorithm that tries to anticipate and infer your behavior and show you things it thinks will engage you, what you have is an entire index that the user can use tags and keys to filter down into a unique view. So you can take basically a perspective on the graph, and those perspectives are just custom feeds. So it's kind of like mixing the idea of a Google feed, when you do a Google search and a Twitter feed of social media, but so imagine if you could like comment on anything in Google, or you could tag anything on Google or tag anything on Spotify or tag anything on any web service, but it could be interoperable across web services. So
Wow.
this way, like if I tag you as Bitcoiner in the PubKey app, maybe it appears that I tag you as Bitcoiner in some other app. And maybe that means something in that app. Like maybe they say, oh, John is OG Bitcoiner. And if you've ever been tagged Bitcoiner by an OG Bitcoiner in our app, then you get this special treatment or permission or access or whatever. And so it's a primitive that allows you to construct the relationships in the system. And so it allows people to decide what's relevant, to connect with what's relevant, interesting to them. It allows extremely long tail matching across the public keys, the users, and the URLs, the content, through this kind of semantic aspect.
That's
Further, one final thing is because it's a social graph, you don't just use the semantics, you also use the social distance. So, for example, say I follow you, that's one degree of connection. You follow me back, that's another degree of connection. Now I can say, show me all posts that you've tagged as Bitcoin, right? And then I can go further. I can say, show me all posts that you and all of the people you follow have tagged as Bitcoin, and I can keep going outwardly, outwardly into the graph until you don't really want to include the whole graph because you at the edges of the graph or the not the edges, that's the wrong term for this context, but the kind of extremities of the graph are going to be where all the spam is. So that's another thing is this is a very effective system for removing spam because you're opting into everything you see instead of having to mute and delete the things that the system
mm,
suggests to you.
interesting. That's really cool. Alrighty, John, last question for you. When I don't think you'll let me down on this. It's one I ask everyone. What is an unpopular opinion that you have? And you get bonus points if you offend some Bitcoiners.
I mean, all of them. I'm like, I'm probably the most offensive Bitcoiner. It's not that I'm trying to do it. I guess in some sense I try to do it. It's not why I do it. It's just how I am. But yeah, I think that a lot of my opinions are unpopular. So I'll mention one that didn't come up yet in this conversation, which is I have a BIP called BIP 177, and the proposal of this BIP is to remove the decimal place in the Bitcoin denomination. Like right now, we have what people call 21 million Bitcoin, and then 8 decimal places. Well, to the attentive newbies in the audience, you'll understand this doesn't make any sense, right? There's no such thing as like 8 decimal places. Like there's just infinite decimal places, right? So what's the problem here? Well, the problem is that there is no decimal. There's no support for floating point in Bitcoin at all. It works as integers, and so basically all it has is base units. It doesn't have a denomination that works from the middle. It has a denomination that works from the bottom. And so the idea of this BIP is to say, remove the 21 million meme. What Bitcoin actually has is roughly 2.1 quadrillion units. That's the actual pieces that make it up. Those units are not divisible. This is a very popular misconception that we could add more, decimal places later. We can't actually because it's an integral system, it's integer based, it doesn't support decimals. The only way to create more units is to multiply them. So if you want there to be more divisibility of Bitcoin, you have to support the idea that there's not 21 million Bitcoin, that there's 210 million Bitcoin. And you have to actually inflate the monetary supply if you want there to be more precision. In my opinion, we don't need more precision. I think 2.1 quadrillion units is enough to encompass all value in current human society. And that's all that really matters. So I don't think we need to change it anyway, but we can't change it. So the BIP is very unpopular because people, the Bitcoin culture loves Satoshis stacking sats, calling those base units sats. They love the 21 million meme and being able they think it's obviously more catchy than saying 2.1 quadrillion, and they've already been doing it for some years. But the truth of the matter is that it's just all, I mean, none of it has any rational base. Um, there's no system where people be like, oh, yeah, there's a lot of systems that had 8 decimal places. It's totally normal. No, there's just no decimal. It's fake. It's just entirely aesthetic. It only appears in your wallets, in your wallet clients. It's not necessary. It's not how the protocol works. So, yeah, my unpopular opinion is delete the decimal, make there be 2.1 quadrillion bitcoins. Stop using the term Satoshi. It's weird. Yeah.
You know how I know this is an unpopular opinion? I remember you tweeting this out like I don't know, it's 6 8 months ago, something. Not before, I guess before the BIP that you more recently announced, and I responded to you and I said, "Hey, honestly, like this kind of makes sense, whatever." And then I didn't look at the comments And when I said that, and I went and looked at the comments, and everyone was just railing on you. I was like, should I delete my response? Like, I, everyone gonna start attacking
No,
me for yeah,
I need your the thing is I think that if everybody sits down and thinks about it and calms down, it's just not that big of a deal. And
yeah,
if you read the BIP, like I did my best to make it digestible. In other words, I kept the BTC concept. Basically, what I said is people can still use 21 million BTC because that's a stock ticker. Like I don't think Bitcoin should pretend that it can specify how the finance world refers to Bitcoin. You know what I mean?
yeah.
Because we have BTC and we have XBT, and those are not going to go away. You know what I mean? Those are encoded within the system. And so we don't have anything encoded within Bitcoin system, and it only has one kind of unit. And so it just makes sense. It's like, oh, if I said to you, "Hey, I've entered this thing and it has these base units, and I named the system Bitcoin, and I said to you, what should I call the base units?" You'd say, "Well, why don't you call them Bitcoin?" Why aren't they Bitcoins? And then I said, "No, what I think we should do is let's put a fake decimal place, 8 zeros into the number, and we'll call those Bitcoins." And you'd be
Yeah.
like, "What the hell's your problem, John?" You're like, "What are you talking about?"
Yeah, yeah. No, I think it makes sense. I think yeah, the hurdle I think is just familiarity that people have. But I will say it would
Well,
be
it's also
hilarious.
like I'm attacking like a totem, you know what I mean?
Yeah,
It's
yeah.
very, what's the word? Taboo, you know what I mean? To even discuss this. People I had some reports responses from people that were like, I don't know why, but I just this makes me mad. This makes me angry." And that's all they could articulate, you know what I mean? Or instead of articulating something, they wanted to understand how I could do this. They're like, why are you spending time on this? Why do you care about this, John?" It's like, it's so emotional for them. But I will
Yeah.
tell you this, since the I formalized it into a BIP and promoted it a bit more to a larger audience, there's a lot more people that are open-minded to it. I
Okay.
don't think it's a majority at all. I still think it's unpopular, technically speaking, but it's much more popular than it used to be. Yeah.
Yeah, the funny thing for me would be is if one day CNBC is reporting Bitcoin at $100,000, and then the next day they're reporting it at fractions of a penny because we've taken a new approach to how we measure its value. It would be very useful for the unit bias that a lot of people have who are looking at
It
shit
would.
coins because they think, hey, XRP is so cheap, so I'm just going to buy some of that instead of Bitcoin. So maybe that's if nothing else, maybe that would be the biggest win that people who don't think they can get in can.
Everybody has a different reason for hating or liking the idea. I will say that I agree that it probably would help a lot with unit bias, and that we probably underestimate how much that actually affects people's interest in Bitcoin. When you
Yeah.
say Bitcoin's $100,000, people are like, "All right, that's not for me." Like, that's all it is. It's like I remember when I was a kid and people were telling me how expensive a Berkshire Hathaway share was, and I thought, "Okay, I'm never gonna own one." Like that's what I thought, and that's what people think. So I think it would help, but my true motivation is simply that I think that I want people to actually understand how Bitcoin works, and that the way we do it now forces people to misunderstand and get miseducated because they end up thinking that Bitcoin is divisible, and it's just not. And that doesn't really become a problem in most cases, but there are two that I can definitely specify that I think are significant enough. One of them is I don't know if you were around or when you joined, but there was the whole Bitcoin pizza incident where we had Francis Coppola, saying, "If Bitcoin is divisible, then there's infinite Bitcoins," or some argument like this. The funny thing is that everybody was wrong. She was wrong. Bitcoiners were wrong for making fun of her, and the reasons they thought she was wrong were wrong. The whole thing was just obnoxious and embarrassing from my perspective because the correct answer to her should have been, "No, Bitcoin is not divisible." And that's it. Sorry, you were misinformed. Bitcoin's not divisible. And that's it. The story's over. But instead, you have people thinking that because she thinks a pie can be split, into many slices, that it can feed more people. That's not what she was trying to say. She was just trying to say that simply, if you keep increasing the quantity of units, then that's monetary inflation. That's all she was trying to say.
Yeah. Yeah. I do
Yeah. Oh,
remember.
and sorry, the second thing, which is maybe a bit more, I don't know, being paranoid, but my guess is maybe you didn't know until I said it in this conversation. Certainly, some of the listeners didn't know it until I said it in this conversation that Bitcoin isn't divisible, and that in order to have more what I would call precision, we would have to multiply the units. And I have a funny poll I did a couple years ago that was, would you support multiplying the quantity of Bitcoin units if it was proportional? In other words, if you had 1 Bitcoin today, you would have 10 Bitcoin tomorrow, but it was proportional to everybody. And I did the another poll separately, which was, would you support adding more divisible places to Bitcoin? It's the same poll,
Yeah,
right?
yeah.
As far as technically speaking, the people, the great majority of people supported the idea of adding more decimal places. The great majority of people did not support the idea of multiplying, even fairly. And so what that says to me is that if they don't understand this about Bitcoin, when the day comes where there's a serious proposal to inflate the monetary base, they're going to have to learn all this then, and they're going to be the narratives then could be much more divisive. You know what I mean? I Until I came along, people would just say to you, "Oh, we just want to add another decimal place, so this way, when Sats become worth more than $1, you can translate into millisats and blah blah blah." People are like, "Oh, that's cool, yeah, microtransactions." But they're not going to say to you, "Oh, but in order to do that, we have to multiply the quantity of Bitcoin." And when you multiply the quantity of Bitcoin, there are like little nuanced decisions that you have to account for in the design. And so, even if we do that someday, there are ways that if you're not smart enough or understand enough how Bitcoin works, that they could make it actually inflation. For example, they could say, we're going to multiply, we're going to add another zero and we're going to extend mining to be mining Bitcoin for more years into the future because now there's more units. That means the miners get more Bitcoin than the users, even if you do it proportion in just a small way, but it's still true. There's so much nuance to understanding the technical trade-offs and interactions that you I like the idea of BIP 177 because it just sets people up to make better decisions.
Yeah, no, I think that makes sense. Awesome, John. Hey, this has been a fun conversation, man. Thank you so much for coming on. Why don't you tell people where to find you? Anything about any projects you're working on that you want people directed to?
Sure. First, thank you so much for having me. The website for the company is synonym.to, .to. The BitKit website is similar, bitkit.to. PubKey, right now we have two sites, pubkey.org, which is like kind of talking about PubKey core, the code. And we have pubkey.app, which is mostly just a teaser for the app that we're currently in private beta for. So in June, we'll open up the private beta to everybody at BTC Prague as another scaling of the test to see how far, if we're ready to add more people. But yeah, check out PubKey app as well. If you want to buy Lightning channels, blocktank.to also has like a web widget where you can configure and buy a Lightning channel in the web page for any Lightning node, not just BitKit. And then finally, if you were interested in my musings, you can follow me on Twitter on Bitcoin Error Log, and I'm also on Telegram, the same handle if you want to chat.
Awesome, John. Thank you so much for the time, man.
Thank you. Have a great day.
You too. And that's a wrap. Again, I hope you enjoyed my conversation with John. I know I sure did. Lots and lots of fun talking with him. Go check out all the projects he's working on. Go follow him. If you want sort of a different opinion on just about everything, he's a great guy to keep tabs on. And of course, if you need help with Bitcoin in proper 100% self-custody, go to thebitcoinway.com/podcast. We would love for you to schedule a free 30-minute consult with a member of our team. We'd love to walk you through how it is we help. It is so important that we take self-custody. We use Bitcoin as money, and we don't take on any counterparty risk or make any compromises in our setup. We also help with online privacy, setting up privacy phones, and we have a Plan B residency option as well. Again, that's thebitcoinway.com/podcast. And do me a huge favor, if you're enjoying the channel, if you like the podcast, like, subscribe, comment, share it with someone. We would really, really appreciate that. Anything we can do to get the word out. And as always, stay safe, stay sovereign, and remember the yield on Bitcoin is freedom.